We've been talking about these latest numbers, the annual inflation rate cooling to 6.3%. How positive is that news for the average Canadian?
Yeah, I think Peter gave a great synopsis. I think it's encouraging would be the word I'd use, both for Canadian citizens as well as for the central bank. There's one thing that's missing, and that's time. And what I mean by that, the central bank needs two things to stop interest rate hikes. They need to see a path to that 2 to 3%. We're still 6.3 and 5.5% respectively in regards to headline and core, but that path is there. So they have the path towards the 2 to 3% by the end of the year. Now, what they need is confidence. And confidence will come with the future data releases. So from our perspective, we agree with the market. We see 25 basis point hike next week. But what's a little bit different from the market, we think it's a 50-50 chance of another 25 in March. And that just depends on the numbers and data that comes out before then.
And we are going to talk a little bit more about that in this conversation, too. I do also want to touch on one of the key things here, which is what people are seeing when they head out shopping. Because despite the inflation rate slowing, we know that people are still feeling the pinch when it comes to grocery stores, with the cost of food up by 11% compared to a year ago. So why is that?
Yeah, you know what? And great question. And that's global factors, right? There's a lot of things happening outside of Canada that are raising the price of the food. Obviously, the war in Ukraine, that's a big wheat producer. So there's a lot of global factors that are impacting it. The great thing is the supply chain is easing up, but there's still a lot of pressure on food.
And so in addition to that, we know that there's been a small decline in the cost of living, but many are still contending with really constrained budgets. So how long is this phase going to last? And how can Canadians navigate best through this?
Well, next week will be interesting with the Bank of Canada because they release their economic projections. Based on the last one, they see inflation back in that 2 to 3% by the end of this year. We think it's possible, but it'd be challenging. So we think the phase lasts another year as inflation gradually comes down, but we think we get back into the range of 2 to 3% a year by 2024.
Okay, so this kind of steps on the response to this question, but we do want to talk about it a little bit more. So the latest inflation data, as you mentioned, comes out in 1 week ahead of the Bank of Canada's next interest rate decision. So we're wondering, in terms of the impact that these numbers that we're seeing today will have, how does that affect the decision that will come from the Bank of Canada?
It definitely affects it, but there's three things that will impact the decision next week over and above inflation. We had it all in the last week. So today's number says, you know what, one more, maybe a pause, maybe one more. So one, maybe two hikes max. The other two factors that they're considering is yesterday's Business Outlook survey, which is a very important survey that the Bank of Canada looks at very carefully. And it points to a very soft landing recession, but a turn in business towards lower growth. Having said that, the inflation expectations in that report went higher. So that's a consideration that they have to take. And then last week's employment number, that was a really hot number in regards to employment. Yes, it's backwards looking, but it's informative. So in looking at these three things together, that's what we believe the Bank of Canada is looking at, and will lead to the 25 basis point hike next week, and the messaging that they will be data dependent and be looking at the economic releases ahead of the next central bank meeting.
And finally, looking at a graph, for example, of inflation rates in the U.S. and Canada, we see, of course, they're very parallel. That is just, a demonstration of how linked the economies are. But really, from, mid-2020, around March, pandemic time, to now when we're seeing, this slight cooling, it has been a really tumultuous period. What lies ahead for 2023?
That's a great question. And you know what lies ahead? It's China. The reopening of China will have impacts on inflation globally, especially in regards to oil prices. So that's an unknown whether that recovery will be a V-shape right away in regards to the second half of this year, which could drive oil prices higher and have the potential to drive headline higher. We're already seeing it in the past week. Oil increased a lot in the past week because of people anticipating China coming back on board. So I think that's a real important factor that's out of control to central bankers, but it's an input into their decision making as well.